So, what if you could consistently buy fantastic companies for way less than they're actually worth? I know, it sounds like a fantasy, right? But it's not. It's a time-tested financial strategy called value investing. And today, we're going to break down exactly how it works.
You ever look at the world's best investors and just wonder, how do they do it? How do they seem to make the right call year after year and build up all that incredible wealth? Well, the secret isn't magic, and it's definitely not just blind luck. It's a very specific and actually a surprisingly simple strategy. In fact, it's the very same strategy used by absolute legends like Benjamin Graham. He's known as the father of value investing. And of course, his most famous student, Warren Buffett. These guys built their entire fortunes on one single powerful philosophy. Okay, so what is the secret sauce? What is this powerful philosophy? Let's pull back the curtain on what's been called the billionaire's secret, value investing. At its absolute core, value investing is just about separating a company's daily stock price from its real long-term worth. The whole game is to find those moments when the market, for whatever reason, is basically having a sale on a fantastic business. Think about it like you're buying a house. Let's say you know for a fact that a beautiful house is truly worth $1 million. But because of some temporary panic in the market, it's listed for just $700,000. I mean, buying that house is a total no-brainer, right? Value investing is just applying that exact same logic to the stock market. But that's the real trick, isn't it? How do you know what that house or that company is really worth? And that leads us to probably the most important concept in a value investor's entire vocabulary, intrinsic value. So, intrinsic value is the total opposite of that flashy, blinking stock price you see on TV. It's a calculated guess of a business's true worth, with all the market noise and emotions stripped away. It's what the company would be worth based on its stuff, its assets, its ability to make money, and what it might do in the future. And this isn't just some gut feeling. Oh no. Value investors are like financial detectives. They have a whole toolkit of metrics they use to uncover a company's true health. For example, they'll look at the price-to-earnings ratio to see if they're paying too much for the profits, and they'll dig into the free cash flow to see how much actual cash the business is generating. It's all about getting under the hood. Benjamin Graham, the master himself, captured the entire idea in this one perfect quote. Price is what you pay, value is what you get. The market is constantly screaming a price at you. A value investor's job is to just tune out that noise and figure out the true value. And then here, you can see how the idea evolved. Warren Buffett took what his mentor taught him and added this crucial layer, quality. See, it's not just about finding any old bargain. It's about finding a wonderful company at a fair price. Because over the long run, it's the quality businesses that give you those extraordinary returns. All right, let's talk about the single most important idea for managing risk when you're doing this. It's your safety net, and it's called the margin of safety. To put it simply, the margin of safety is just the discount you get between what the company is really worth and the price you actually pay. The bigger that gap, the more room you have for things to go wrong. It's the built-in cushion that protects you if your calculations are a little off or if you just get unlucky. Let's make this real with some numbers. Okay, so after all your research, you figure out a company's intrinsic value is about $100 a share. But right now, you look at the market and it's selling for only $70. That $30 difference, that 30% discount, that's it. That is your margin of safety. That's the safety net that gives great investors the confidence they need to actually make a move. So, how do you actually put all of this together? Well, it's not random. There's a process. Here's a simple 4-step game plan that pretty much all value investors follow. First, you find great businesses, companies with a solid track record. Then, step 2, you put on that detective hat and you dig deep into their financials. From there, step 3, you do the homework to estimate their intrinsic value. And finally, the hardest part of all, you wait. You patiently wait for the market to offer you the price you want, a price that gives you that critical margin of safety. And that last step, patience, is so unbelievably important that it deserves its own moment. In value investing, patience really is the most important virtue you can have. I mean, Buffett nailed it with this one. He said the stock market is basically a machine that transfers money from impatient people to patient people. The hyperactive trader who's buying and selling all day is probably going to strike out. The value investor just waits calmly for that one perfect pitch, right down the middle. Right?
And let's be crystal clear. This is not a get-rich-quick scheme. Value investing is not about trying to make huge gains in 6 months. It's about building real, lasting wealth over 5, 10, even 20 years, and letting the incredible power of compounding do all the heavy lifting for you.
So, if you boil this entire philosophy down, it really comes down to a simple 3-part checklist. Number 1, figure out the real intrinsic value. Number 2, insist on a margin of safety before you even think about buying. And number 3, have the discipline and the patience to play the long game.
Which really leaves us with just one final thought. Now that you've got the framework, the real question is, what great, wonderful company do you think the market is totally misunderstanding and undervaluing right now? The answer to that question could be your next great investment.
দর্শক, আমাদের চ্যানেলের পক্ষ থেকে আমরা মোমেন্টাম ট্রেডিং এর মেন্টরশিপ প্রোগ্রাম চালু করেছি। এই প্রোগ্রামে আমরা 1-to-1 বেসিসে মোমেন্টাম মাস্টার প্রো কোর্সটি করাবো। এই কোর্সটা মূলত 3 ফেজে হবে। প্রথম ফেজে আমরা আপনাকে 4টা ক্লাসে মোমেন্টাম মাস্টারের যে কোর্স টেকনিক্যাল অ্যানালিসিসের সেটা শেষ করাবো। এর পরের ফেজে রিভিউ ক্লাস নিব আমরা। এর জন্য আপনাকে মার্কেটে আগে ডেমো ট্রেড করতে বলবো। আপনি ডেমো ট্রেড করবেন কিছু, তারপর আমাদের কাছে আসবেন। আমরা আপনার ডেমো ট্রেড দেখে আপনার ফাইন টিউন করায় দিব। এরপরে আপনি রিয়েল মার্কেটে যাবেন, রিয়েল মানি দিয়ে ট্রেড করবেন মার্কেটে প্রায় 1.5-2 মাস। তারপরে আপনার যে ভুলগুলো হলো ওগুলা মিট আপ করার জন্য ফেজ 3-তে আমরা অ্যাডজাস্টমেন্ট ক্লাস নিব আপনাকে। তারপর আপনি 100% রেডি হবেন মার্কেটের জন্য। এভাবে আমরা আমাদের 1-to-1 বেসিসে মোমেন্টাম ট্রেডিং মেন্টরশিপ প্রোগ্রামটা ডিজাইন করেছি। একজন করেই আমরা নিব। তাদেরকে আগামী 3 মাস বা 4 মাসের মধ্যেই আমরা এই কোর্সটা কমপ্লিট করাবো। এখানে শুধুমাত্র ক্লাস নিয়েই ছেড়ে দেওয়া হবে না। ফার্স্টে ক্লাস নেওয়া হবে, তারপরে রিভিউ ক্লাস হবে, তারপরে অ্যাডজাস্টমেন্ট ক্লাস হবে। তারপরে আপনি যখন ফিল করবেন যে আপনি এখন মার্কেটের জন্য রেডি, তখনই আমরা কেবল আপনাকে ছেড়ে দিব। তো এই প্রোগ্রামে, আমাদের মেন্টরশিপ প্রোগ্রামে জয়েন করতে চাইলে আমাদেরকে ইমেল করুন imkfintechschool@gmail.com এই ঠিকানায়, অথবা stockanalyst kabir@gmail.com এই ঠিকানায়। তবে একটু মনে রাখতে হবে, আমাদের অন্যান্য রেগুলার কোর্সের চাইতে এই মেন্টরশিপ প্রোগ্রামের কোর্স ফি কিন্তু অনেক বেশি হবে।